Hello everyone, my name is Tim and today I'm going to be doing a review on another monthly dividend stock. It is going to be the Armour Residential REIT, ticker symbol ARR. I'm going to be going over the company information, the stock performance over the last year. I'm going to be going over the dividend information as well as any company information for financials that I can find. And I'm also going to be going over the stock options, if any, that are available on Robinhood as well as other platforms, but I'll use Robinhood just due to ease of the interface. And I'll also, for fun, be going over how many shares of the stock you will need to have in order to get $1,000 a month in dividend income. I hope you'll hit the like and subscribe button down below if you like this video. You can also use my link down below to join my Discord. It is free, and every morning before the stock market opens, I will be putting in 1 to 2 stock choices that I have for that day that could possibly perform very well. Over the last week, I've had 2 that made money and 3 that did not meet the buyer requirements, so they never actually got filled. Hope you all have a great day. Stay safe. Armour Residential REIT is currently trading as of August 15th, 2021, which is a Sunday, so the markets are closed. But it is currently trading for $10.58 per share. And over the last year, it has gone up 8.18%. Year to date, it is down 1.95%. Over the last 6 months, it has dropped 12.42%. Over the last month, it is down 6.29%. And over just the last 5 days, it is up 0.76%. They have an EPS of 0.94, a PE ratio of 11.32. The Armour Residential REIT invests in residential mortgage-backed securities, better known as MBS, in the United States. The company's securities portfolio primarily consists of the United States government-sponsored entities, or GSEs, and the government National Mortgage Administration's issued or guaranteed securities backed by fixed rate, hybrid, adjustable rate, and adjustable rate home loans, as well as unsecured notes and bonds issued by the GSE and the United States Treasuries, and money market instruments. It also invests in other securities backed by residential mortgages for which the payment of principal and interest is not guaranteed by a GSE or government agency. The company has elected to be taxed as a real estate investment trust under the Internal Revenue Code. As a result, it would not be subject to corporate income tax on that portion of its net income that is distributed to shareholders, which means by law they have to distribute 90% of their profits to their shareholders as dividends. Armour Residential REIT was founded in 2008 and is based in Vero Beach, Florida. It does not have any employees listed at this particular time. This is a monthly paying REIT. They have a dividend yield of 11.34%, and they have an annual payout of $1.20 per share per year. They have a high payout ratio of 128.34% and a negative 19% 5-year growth rate with 0 years of dividend growth. That comes out to 10 cents per share per month that you will receive with an ex-dividend date between the 13th and 15th of the month and a payout date towards the end of the month. The financials for ARR are not the best from what I've seen. As you can see here for their income statement, they had an interest expense that went up considerably in 2019, then it dropped precipitously in 2020. Which is to be expected. And then for the second quarter 2021, they're at $17,244,000. For their total revenue for 2017, 2018, 2019, 2020, the only one that showed a profit out of those was 2017, but 2018, 2019, and 2020, they lost money. Now for the second quarter 2021, they are so far positive, about 18 million, and their total expenses have stayed roughly the same over the last 4 years. I mean, it has gone up some from 35 million in 2017 up to 37 in 2018, then up to 38.5 in 2019, but then it dropped in 2020. Again, no surprise considering what happened in 2020. And right now, at around the 8th month mark in 2021, they are showing at about half of what that was. So at least so far, their total expenses seem to be a little bit lower this year, but their net income has dropped a lot too. In 2017, they were at 181 million net income. Then in 2018, 2019, and 2020, they were losing income quite a bit. And so far in 2021, they're only showing a profit of about 2 million. And then their net income attributable to their parent company, again, is the same thing as the net income. So again, not very impressive. And then net income available to common is, aside from 2017, all negative, including even into the second quarter of 2021. So while this may have a high yield dividend, I would definitely use caution when investing into this REIT. But that's just my own personal opinion. For options, they don't really have a whole lot that's available for options. They have monthly options you can do. Selling a put just for the next few days is basically pointless. You would only get $1, only lowering your cost basis to $9.99 per share if the share price were to drop below $10. And then if you were to look at buying 100 shares by selling a put for September, you would be getting $15 in credit. And so that would lower your cost basis to $9.85. But as you can see here, there's basically no volume. There is an open interest of 271, but no one's doing anything with it. And then in October, you can get a little bit more at $23 for selling a put. And again, no volume though. A lot of interest, but no volume. So no one is actually buying a put at this range and at this date time. So even going further into 2022, again, you can lower your cost basis a lot, from $63 down to bringing your cost basis to $9.37 per share if the stock price goes below $10. And there is at least some volume here, but not very much. There's only 15 that were sold at this point. And then if you do already have 100 shares, there isn't a whole lot of extra income you're going to be getting from this REIT. For instance, selling a call in 2022 is only going to get you $8. And then if you do it in 2023, you can get around $40 if you already have 100 shares of this REIT. So options for this isn't really the best, but if you're looking at getting 100 shares of this for the dividend and you want to lower your cost basis a little bit, or you want to make some extra income if you already have 100 shares, then it's okay to make a few dollars here and there. Just remember that these are monthly options. Now for my favorite part of these videos, I like seeing how many shares of this stock I would need to earn $1,000 in average income for dividends. So for ARR, it's fairly easy to figure that out because of the dividend payout. So for this one, you would need 10,000 shares at a market value of $105,800 to get a annual income of $12,000 or $1,000 estimated average monthly income. Keep in mind though, like I said in my financials part of this video, that their financials don't look the best, but if you are interested in just pure dividend income, that is completely up to you. I am not a financial advisor. I am not going to tell you what to invest in or how to invest your money. That is completely up to you. I take no responsibility for that. But if you're interested in this stock, it isn't a bad paying REIT. I just wish their financials showed better for right now. Thank you for watching, everyone. I hope you enjoyed the video. If you did, don't forget to hit the like and subscribe button down below. It really, really does help out my channel. And also, the link to my Discord down below. If you're interested in getting my stock picks every morning, it is free to join. Hope you have a great day, and hope you have a great week in the stock market.